Hello everyone, my beautiful people. You guys knew that I would be bullish on the stock market over the next few days. I went into detail explaining the exact reasoning why I would be bullish. Every single one of those things ended up holding true and the market ended up bouncing. So in today's video, we're going to take a look at why all of those things happened. We're going to take a look at the next steps for the S&P 500, the NASDAQ, the Russell, the dollar, the bonds. And one thing to take into consideration is that this sort of stuff is just an inevitability. Most of the stuff that I say ends up working. And it's a testament to the fact that everyone is watching because I don't BS. You guys watch these videos and in turn, you guys have become much better traders. I'm sure that you guys have seen a lot of the things that I look for in your day-to-day trading. And oftentimes, I'm sure you guys are watching and you see things before I even post them on YouTube. And that is my goal. Making you guys better traders is 100% my goal. And it's holding true. It's definitely holding true. And one step at a time. And the fact that it does work so well is testament that the people that do hate, that want this to fail, they get excited. They get excited down there because it's so rare that we are wrong on positions and directional plays that it brings joy to people when things don't work out. And for all of you guys, I hate to break it to you, but the majority of the time we are correct. So just continue to fade me and continue to do the opposite of what I'm saying, and you're gonna end up seeing a detriment to your portfolios. But at the same time, I'm not your financial advisor. This is not financial advice. Put your egos aside and put your racism aside. Put your egos aside. Learn from someone that knows more than you about trading, and you'll be able to provide a better life to yourself and your family. Put your hate to your side. Put your hate to the side. And swallow your pride. Swallow your ego. You should already be doing that with the people in your life. If you're not doing that with someone that you met online or someone that you randomly see online, I could only imagine what you guys are doing to your loved ones. So I would really, really recommend just watch the video. Stop talking crap. Because at the end of the day, humble yourself. A lot of the haters and stuff, you guys are not making full-time money off of this. And your goal is to make money full-time off of it. So why not learn from someone that's doing this for free, that has never charged $1 for anything, and is consistently doing this for free? Like, it makes no sense to me. So, yeah, if you don't want to, either you should seek professional help, or honestly, you probably just haven't gotten into a fight when you were younger, and honestly, like you've never been in any physical conflict. So that's the two things that I could think of. But anyway, the market bounced. So in today's video, sorry for the little rant, but we're going to take a look at the overall market, and we're going to take a look at the S&P 500, the NASDAQ, the Russell, the dollar, the bonds, all that good stuff. And yeah, all right, so without further ado, let's get started with the video. First things first, you guys know that we like to start off by looking at the dollar. In the morning, I don't know if you guys were watching this, but the dollar was green in the morning. Microsoft, Google, large AI tech stocks, Apple, they were all green as well. So with the dollar being green, so obviously this is relevant because the dollar has an inverse relationship to the market. When the dollar is green, then the overall market is going to be red. Okay? So the dollar was green this morning, but what we saw was the large, big, heavy hitters, Apple, Microsoft, Google, they were all green. So I already knew that the market was just going to continue skyrocketing, that this was a bear trap on the dollar, and it was just there to get people to be short on equities a bit more so that there would be more room to pop to the upside. That's exactly what happened. So right now on the dollar, we can see that we failed to close above any major level of resistance, and we ended up closing red. So obviously, this is very bullish for the overall market. So that's number one, okay? Now, let's go ahead and take a look at the bonds. So the bonds, obviously, as well, you guys know that I've been looking at the bonds, and we've been in a falling wedge pattern on the bonds. Falling wedge patterns are extremely bullish patterns, okay? So when we have an extremely bullish pattern on the bonds, it's good for the overall market because the bonds have a more correlated relationship. So if the bonds are going down, the market is going down. But as you can see, the bonds, they're pushing up pretty well. They're breaking out on the falling wedge. It's not drawn perfectly, but this is a bullish move on the bonds. And with a bullish move on the bonds like this, breaking above major levels of resistance, this helped permeate into the equities market, and that helped propel the equities market up as well. All right. So the dollar and the bonds both look bullish for the overall equities market. Okay. Next, let's quickly just take a look at the large tech stocks, and then we'll take a look at the S&P, the NASDAQ, and the Russell. All right, first off, let's take a look at Apple. So Apple looked really, really good. The fact that we broke and closed above 176.57. Obviously, this was very bullish, and then today we gapped up and had another bullish move to the upside as the rest of the tech stocks did. And this was a very nice move on Apple. Clearly looks very, very bullish. And obviously, the next major level of resistance is going to be the high on this candle from August 7th at 183. So that's going to be the next major level of resistance on Apple. And things look pretty good here. But I'm not saying to go long or short. I'm just giving an overall explanation of what's going on with the tech stocks. Obviously, of course, with Nvidia up huge in the after hours. We're going to take a look at Nvidia afterward. But these tech stocks, now is not really the time to start going long, in my opinion. You would rather wait for a pullback to levels of support for a potential continued move to the upside. And it's also too risky to start being short heavily. This is a time to either go light short or light long. Either way, the market can make a move either way, which is the difficult part here. So, yeah, it's going to be pretty interesting. But we caught this initial move, and so far so good. Things are looking pretty good. But yeah, regardless, Apple, really, really good. Microsoft, obviously, also really, really good. Closed above the 20 exponential moving average. And clearly, you know, also really, really bullish. And it's up nice in the after hours due to Nvidia being up in the after hours. And then obviously Google is skyrocketing to the upside. It also really strong. And Amazon not doing too well because it's not as heavily AI related and everything. But then Tesla, similar situation to Amazon, but Tesla was one of the main reasons why initially we started to bounce, because we were so overextended to the downside. So now that a lot of people are taking profits out of Tesla, they're funneling the money back into the other laggers, as well as Nvidia, right? So yeah, what a pretty spectacular move. And now let's go ahead and take a look at Nvidia and the earnings. All right, so first of all, this is a chart of Nvidia. Up huge in the after hours. Can't even see the price on the chart. You have to scroll up. So you can see that we're up almost $40 in the after hours because Nvidia had a really, really good earning. So Nvidia tops estimates and says sales will jump 170% this quarter, driven by demand for AI chips. Basically, the shares climbed 8% in extended hours on Wednesday after the chipmaker beats estimates for the second quarter and issued optimistic guidance for the current period. Earnings $270 per share adjusted versus $209 expected. And revenue is $13.5 billion versus $11.2 expected. So this is a really, really huge beat in revenue. And Nvidia said it expects third quarter revenue of about $16 billion, higher than $12.6 billion forecasted. So Nvidia's guidance suggests sales will grow 170% on an annual basis in the current quarter. Net income jumped to $6.19 billion, or 2.48 cents a share, from $656 million, or 26 cents a year earlier. So that is almost 1,000% increase. Nvidia's strong sales and forecasts underscore how central the company's technology has become to the generative AI boom. Nvidia's A100 and H100 AI chips are needed to build and run AI applications like OpenAI's ChatGPT and other services that take simple text queries and respond with conversational answers or images. So once again, Nvidia makes all the chips that all of these AI companies are going to be using, and that's why they're doing so. And that's why AMD is also up in the after hours, essentially, as a sympathy play. Not up as much, but AMD is up 3%. And yeah, obviously, this is because Nvidia, right? So now with Nvidia up this much, obviously the NASDAQ is going to be up in the after hours as well. The overall market should be up in the after hours, but we'll see how it responds. But now things get a little dangerous. Things are going to get a little dangerous to start going long here on the overall market. We caught the bottoms here, okay? We went long down here, and then we went long again on this pullback. So now things are starting to get a little dangerous. Can't automatically just start going long here as we get close to these levels of resistance. So I was explaining 442, 443 would be major resistance on the SPY, right? We closed at 443, and now we are going to be opening above, most likely, okay? So the main levels of resistance now is going to be the 445 level. And above 445, we can come up to around this zone here. But the lower edge of that is going to be 445 to 446. What don't we do? Don't go long at resistance. We go short at resistance, or we sell our long positions. Now, what you don't really want to do is you don't want to start going heavily short at this point in the market, because the market can just continue bouncing. But if you want to start leaning short for some sort of longer term puts, maybe 2 months out, have that with some stop losses. That's completely fine. But there's still room. We can make another leg up to around 447, maybe 448, right? We could jump up to those levels. But at that point, the market would be very overextended, and that would be a much better opportunity to go short, in my opinion. And like I said, I don't think the market hits 460 again. I think it still hits 420 first. I could be completely wrong. We are on the right side of the market at the moment. We're long. We're holding on to runners. But if we gap up, expect... it would be really difficult. It would just be really difficult, honestly, to think that the market continues bouncing. Because then the risk reward just becomes absolutely garbage. But tomorrow is going to basically be the second day that we crossed outside of the MACD here. And tomorrow we also have to lean neutral bullish. And yeah, 446, 447 is going to be a major level of resistance, honestly. And at that point, it's just going to be really disgusting. I would not want to go long, and I would rather not hold a position. The only thing that would be possible is you take any short position that you take at those levels. You have to have a stop loss, or they have to be lottos, basically. And it's not clear cut that we're going to, end up breaking above, because technically, right, this is a bear flag. So when you look at this, right, the reason why I went long is because, so one of the main reasons why I went long is when you're looking at this on the SPY, if you made a Fibonacci level from July 27th high to the most recent lows on August 18th, we went long before the 38.2% fib hit. Okay, so the 38.2% fib is obviously a very major on a bear flag. The bounce back to the 38.2% fib is very high likely. And to expect that the market is not going to touch the 38.2% fib is risky. It's not something that you should even take. So on a huge move down, okay, we should be bouncing back up to the 38.2% fib, which is 443. That's what I've been saying. That's why we went long. Now that we're in a bear flag, obviously, all right, we're still in a bear flag. The 50% fib is this 446 level. So are we going to end up breaking above the 50? And then as we break above the 50% fib, if we touch the 618% fib, then this bear flag could end up being just broken, and that concept of the bear flag can be broken. But having a retest of the 50% fib is not as likely as the 38.2% fib. Retesting the 38.2% fib is exponentially higher likelihood. So that's why we went long, and it worked out. And it looks like overnight we're going to touch the 50% fib as well, which is great. So with that being said, we now just have to look at how the market responds in this zone right here between the 50 and the 618. Very, very simply, can't really do much at the moment. And if you want to trade short, you could trade short along the 618% fib as a stop loss. Any sort of level here, 447, 448. And yeah, if you think the market is going to end up going down, by all means, now would be a much better time to go short than down here at 440. So yeah, I'm going to update you guys on what I do depending on how the market ends up behaving tomorrow. But definitely yesterday was not the time to go short, and neither was today. So yeah, that worked out really, really well. But when taking a look at the NASDAQ, similar concept. The NASDAQ is going to do pretty well. So obviously 360, 373, 374 is the next major level of resistance on the NASDAQ. We just need to see how that responds. We can take a look at the fib on the NASDAQ. And we can see that it's almost at the 50% fib. And tomorrow it's going to be trading within the 50 and the 618 as well. So there's that on the NASDAQ. And the crowd favorite, one of the reasons why I was initially long and one of the reasons why I wanted to be bullish was this bullish structure on the IWM. I was explaining that you should never ever go short. I was explaining that you should never ever go short on a structure like this at the bottom of a big move to the downside. When something is making a bull flag like this, you never go short because it's such a bullish opportunity. And that's exactly what ended up happening. The IWM ended up bouncing. Clearly worked. And when you're looking at the fib from here, it's not as strong as the SPY or the NASDAQ, obviously. But we just touched the 23.6. And now we are on track to start making a test to the 38.2% fib at 188.36 on the IWM. So yeah, man. Things are looking good for the market. Obviously, Bitcoin is also bouncing. Every single, like, I posted this on Twitter. Any sort of time we get a huge move to the anytime we get a huge move to the downside on Bitcoin, all you literally need to do is just go long on like the big move to the downside and get a big pop. And it's been working time and time again, bro. Literally, this is exactly where I went long. I didn't post it on our Twitter, but I posted the other time a few days ago when we fell. And yeah, man, it's just so easy. When there's a huge move to the downside overnight or something like this, on Bitcoin, and we're trading outside of the bands or anything like that, on the first pullback, right? On the first pullback, go long, and you just have a tight stop loss at the low of that move, and it always works. We always bounce. So yeah, you know, and Bitcoin is obviously doing well because the overall market is also doing well. It's getting a bit of a bounce. If the IWM can get its act together, that'd be great. But tomorrow is most likely going to be another NASDAQ-driven day. In case the NASDAQ doesn't continue, then the IWM should get some more love. And with the IWM getting some more love, the S&P should get some more love. All right, so that would be spectacular, and that would be great. And these other international markets are also bottoming out or showing some bullishness, which is also good. And yeah, hope you guys enjoyed today's video. Please make sure to like, comment, subscribe, do all that good stuff. And I'll see you guys bright and early tomorrow morning. Have a good